There is a huge opportunity to build a distributed energy utility. I've mentioned this to you before, but I think there's going to be a cataclysm in the energy markets. I think the utilities are under duress. They're in a very, very difficult spot, and the laws don't understand what will happen when individuals like you and I can generate our own power.
Chamath Palhipitiya, a billionaire investor who once said Tesla's stock price could triple from around $810 per share, he sold his stake in the electric vehicle maker to raise cash for other ventures. What changed? What does this mean for Tesla? Chamath sells Tesla. Should you too? Hey folks, welcome back to Chamath Polypedia Zone. In this video, we are going to discuss Chamath's investments in Tesla and other firms, including Virgin Galactic, SPCE, Clover Health, CLOV, and others, as well as what we believe this means for the markets.
We curate our lives around this perceived sense of perfection because we get rewarded in these short-term signals, hearts, likes, thumbs up, and we conflate that with value and we conflate it with truth.
Before we move on to the video, don't forget to drop a like on this video and subscribe to the channel if you haven't already. Make sure that the post notifications are turned on so that you never miss a video from us. Without further ado, let's dive in. Polypedia's selling can be viewed in the most charitable light as a guy on a mission to transform the world, and if he can find a better way to reinvest cash at high rates of return, he should do so, because Chamath is a promoter who cultivates a public image that allows him to buy shares for a low price, drive up the price in public markets, and then sell it to the public and pocket the profits. In our opinion, the truth is most likely a combination of the two. However, regardless of how you feel about him, his stock sales in Tesla and other companies are useful data. This is a signal for investors to begin taking chips off the table. Polypedia, known by his first name Chamath, was an early executive at Facebook. Before leaving in 2011, he founded Social Capital. He invested some of his Facebook earnings in a group of Silicon Valley venture investors that purchased the NBA's Golden State Warriors. Social Funds was a hedge fund that managed capital for outside investors until 2018, and its 2019 annual letter details the fund's performance. Polypedia closed the fund to outside investors in 2018, but he continues to manage his own money under the moniker Social Capital. Polypedia has also established a reputation as a Silicon Valley insider who's prepared to criticize Wall Street. His old company, Facebook, Polypedia claimed, tearing society apart. He has chastised startups that prioritize growth above quality and fail to manage their cash wisely. He spoke out against airline bailouts in 2020, arguing that they would benefit hedge funds and the wealthiest stockholders. He talked about how he made money trading GameStop, that's GME, options before donating the profits. Since at least 2017, Polypedia has been positive on Tesla. In December of that year, he outlined why he thought Tesla's convertible bonds were his favorite way to bet on Elon Musk. To say the least, it worked out very well. We are not sure if he converted the bonds to shares, but it seems quaint to think about the period when you could acquire Tesla shares for 2.375% in bond interest. Polypedia supported Musk's attempts to operate the company and pushed back against criticism of the company's financial statements and missed production and delivery numbers. I won't go over everything Chamath has said recently about the company, but he appears to be enthusiastic as recently as January. Tesla is no longer about the car business, about to disrupt energy and utilities, and underestimated, he remarked recently. With all of these upbeat pronouncements, it came as a shock to learn that he had sold all of his stock in the previous year. So why did he have a change of heart? Polypedia's Tesla investment has grown 1,000% since 2017. And he indicated his stock sales were to support additional investments in fields like distributed power. There are a variety of reasons why his tax situation may differ from that of the regular investor. For example, he may be able to deduct losses at a company he owns, but if he invested $100 million, made $1 billion in gains, and sold it all, he would owe federal and state capital gain taxes. That's probably $200 million in federal taxes and another $130 million in state capital gain taxes if he lived in California. So he'd pay $330 million in taxes on $1.1 billion in profits, leaving him with $770 million in cash. Chamath indicated in the interview at the start of the piece that he sold stock to make fresh investments because the alternative was levering up to a level he didn't like. He was presumably referring to the possibility of taking out a margin loan on his Tesla stock if he borrowed the same $770 million. He would owe that amount in Tesla stocks worth $1.1 billion unless the value of Tesla stock decreased to half that amount. That is $385 million. He would probably have no margin call issues. We appreciate the desire to avoid being leveraged, but Polypedia could hedge his Tesla holdings by selling cars and buying options or using a more complex strategy. So this doesn't seem like a very good argument to us. Similarly, why does he have to sell all of his Tesla stock if he wants money to fund fresh investments?
I'll pick up a little bit of the slack that Tesla is not going to be able to operationalize as they build an incredible EV business. And so both things I think will happen. I think it'll manifest in a different company.
As a result, it appears to us that the more plausible explanation is that he does not believe the stock will appreciate much more. We assume he came to the conclusion after Tesla was included in the S&P 500 in December 2020. Tesla's inclusion in the S&P 500 was significant because it required many index funds to buy shares. That is, after Tesla was added to the index, there were no more marginal buyers of the stock anywhere. This notion appeared to be a loser in December and January as meme stocks surged steadily after Tesla was added to the index. However, the stock has gone up and down since then but has been virtually exactly in line, whereas the performance of larger components has been more variable to the upside and downside. Polypedia concluded he was simply taking on the same risks as holding the index, but with no added chance of higher investment returns, and he sold when the company outperformed the index. Even though large-cap stocks can provide significant rewards for individual investors, smaller sums of money should be able to make larger returns by investing in smaller stock sizes with higher growth potential, or deeper discounts to fair valuation. So if Chamath believes he can make more money investing elsewhere, you presumably can as well. Despite the fact that he sold his Tesla stock, Chamath probably made a decent profit. He was in the same league as Ron Barron of Barron Capital and Cathie Wood of ARK Invest, as one of the most outspoken big-time investors. In recent years, all three investors have held overwhelming strong views on Tesla. While Tesla was rapidly climbing towards stock market legend status in 2020 after gaining over 700%. Chamath regularly appeared on television advising anybody with the means to get in while they could. Chamath has always been optimistic about Tesla's car industry, but a big upheaval was expected in the energy sector. When it came to the doubling and triple of the company's worth, Chamath thought the potential disruption that Tesla Solar offered was the more striking one. Polypedia has become a prolific sponsor of blank check acquisition businesses known as SPACs in the previous 2 years. His businesses began with ticker symbols such as IPOA, IPOB, and others, and many have subsequently merged. Virgin Galactic was formed from IPOA. IPOB was renamed Opendoor. Clover Health was born from IPOC. IPOE changed its name to SoFi. Other stocks, we believe, have yet to declare acquisition targets, despite the fact that SPCE and SoFi are still much more above their pre-merger SPAC levels. It's remarkable that each of these stocks has had such a horrible year, while the indexes are up. Chamath's sale of all the Virgin Galactic equity caught my eye earlier this year. Polypedia sold all of his shares in the low $30, and stocks continued to plummet until it reached over $50 a share in the run-up to a successful debut of a passenger flight a few months ago. While Chamath's sales did not top up the stock price, they were a good sign that at least one educated insider thought it was worthwhile to sell. According to Polypedia's most recent annual letter, he has one of the most impressive investment histories with returns of 1,400%.
And so when I have these ideas, the money has to come from someplace. The only other solution would be for me to get totally levered up. And I'm just not comfortable with that risk.
Regardless of what we may feel about Tesla, Elon Musk, or the future of electric vehicles, wise investors would do well to follow Chamath's lead, profit from Tesla, and hunt for greater opportunities elsewhere. With this, we've come to the end of the video. Thank you so much for taking your time. What's your take on Tesla? If you had invested $100 million in Tesla, would you sell them like Polypedia? Do let us know in the comment section below. Subscribe for more content just like this one and share it with your friends. And don't forget to smash that like button and also press the bell icon to get notified about our new videos. Until then, fellas,